So many stocks to cover. I have predictions for a ton of them. DJT, BABA, Apple, Tesla. But I had to be very thoughtful about what were some of the most important stocks and predictions that I could share with you guys today. And I decided upon what is hot right now, which is the meme stocks as well as Bitcoin. I made a prediction when Bitcoin was down at 60,000 that we were going to skyrocket up and that we were going to be moving back to 68K. And we got all the way up to 66K. We've pulled back. I'll tell you right off the bat, I see structural support at around 64K, maybe 64,200. And I think that it's going to come back test that. And I believe that we are likely to shoot off like a rocket again. Bitcoin is on the move. Now, that's what I'm watching for. I don't have a crystal ball. When I come and share these ideas with you, they're what I gathered after studying the charts for hours. Now, I'm going to be talking to you guys about the relationship between the meme stocks that went on a massive ride here in the last week with Bitcoin, because this exact same thing happened in the last bull top cycle of Bitcoin in 2021. That's when this whole thing kicked off the first time. And I'm going to give you guys strong predictions about what I think is going to happen with GME and AMC. I have a feeling of what's going to happen. I'm going to pull up those charts and show you where the best buy zones are and where the structural supports are and where the lines in the sand are, because I'll just tell you there, the run isn't over yet. And I'm going to explain to you guys why. I think the next 30 days in this market are going to be absolutely wild. And I'm going to give you some brief thoughts on the overall stock market and what's happening and shaping up there, because as I had predicted over a month ago that we were going to get a 6% correction, and then we were going to have 5 strong weeks pushing us all the way back to all-time highs. Every bit of that came to pass, and I've been studying the charts to figure out what is next. What's next, as well as looking at the macroeconomics, which is basically the data. So what is the data telling us about this economy right now? Let me briefly dive into that. So, news story, stock market, Dow, S&P 500 at all-time highs. Macroeconomic data, bad. What data am I talking about? Well, we got data last week, initial jobless claims that came in with basically 2,000 more people looking for jobs than had been expected, right? That was showing a weakening of the economy, showing that the Fed's heightened rate is doing its job, slowing things down because people are starting to get unemployed, right? And then after that, we got the industrial production for April, and that basically was below expectations after already having a downward revised number. So industrial production is basically everything that we're producing in this country and manufacturing and selling within the country and outside the country. It's showing weakness on a number that had already been revised to the downside. So again, it's a pretty strong signal that the economy is slowing down. Another bad data signal, and yet here we are at all-time highs. And we also had new building permit housing starts. That number dropped 3% from March, right? And now, personally, I believe that real estate is going to remain strong through this year. I could devote an entire video to that, but I'll just tell you that I think that we're not going to see a capitulation or the floor drop out in real estate. I just don't see it. Matter of fact, if rates come down, I think we're going to begin to see more housing starts, because we've had such a period of time in which rental properties prices have gone through the roof. People are going to begin to take that situation and convert it to a new home, especially when the rates come down a little bit. So housing is probably going to end the year fine. But here's the bottom line. Bad data, bad data, bad data, and yet the stock market's at an all-time high and climbing. Now, I want to prepare you guys because we are getting bad data. The Fed will potentially cut this year, and I believe that we have entered into distribution. I had predicted this regarding Apple stock, that it was going to come up off its lows on low volume back up into the top of the range, and that this was the characteristics of distribution. They're not going to sell it heavy sell orders, high volume at the bottom of the range. They don't want to lose that much money. So they're going to cause it to go all the way back to the top of the range, and then they're going to actively sell it consistently down back to the bottom of the range. Everything is kind of playing out the way that I expected it to. I'm going to take you guys into the S&P 500 chart. I'm going to take you guys into Bitcoin and GME and AMC. It's going to be a great show. This is the Stocks with Josh show. Appreciate the likes. I know that a lot of you guys literally got the notification of the video and you hit the like for me. And I appreciate you guys. Throw a heart and say hi in the comments. And if you're new to this page, I'll just tell you right now, I am not afraid to study those charts and give a prediction. And I do tell you guys, not a day before it happens or the day it happened or the day after it happened. I am making these predictions weeks in advance, which allows you to do research and allows you to get positioned as well and potentially make some money. Again, if you've made some money, throw a heart and say so in the comments section. I'd appreciate it. All right, let's get into the S&P 500 and start there. All right, I want to keep my analysis very simple. We're looking at 1 week candles. I'm going to just remind you guys that we are in a clear uptrend. We talked about this pullback. We talked about having 5 strong weekly candles pushing us back into the top of the range. And I just want to prepare you guys for something that I'm going to be watching out for. There's 2 things that have to happen if we're going to stay on track and if we're going to get back to 5,500. 1, next week, we need to have a candle that opens above the center line of our ascending channel. So we need a candle that opens and stays above that middle line. And that means that we're going to be on track to move all the way up to 5,500. And right there, guys, if that plays out, there's hundreds and hundreds of percentage points of profit to be made. We want to be careful that we don't see a candle open beneath this line and on Monday be moving down underneath this center line. The breakout point for the next move has to be above this line. Now, I'm going to give you a couple other thoughts. At that point, if the bullish narrative is going to continue, we can have some smaller candles in the range that's between the middle line and this top line. We can have some smaller candles, but we need to stay up there. And here's a very important point. From this point forward, we should not break back beneath the bottom half of this ascending column until we get to 5580. So that's something I'm going to be watching out for. Another thing that I want you guys to understand is this trend that we've had all the way since October of 2023, this beautiful uptrend that we've had. At this point, we have to stay within this ascending channel. At any point, if we break outside to the downside of this channel, I want you guys to know that we are going to have at bare minimum of a 10% correction from the top and to the bottom. And so I want you guys to be prepared for that. That's some predictive conversation. I'm going to try to keep it simple and clear. Let's just go back and remind ourselves of what the previous bull cycle in 2021 looked like. And here's the point. So here is a similar place where we got a 6% correction within a ascending channel, right near the end of the run that led us into the 2022 downturn. And we got from the bottom of the channel all the way to the top of that channel before you could say we entered into many weeks of distribution. I wanted to make it clear to you guys, when we get back to the top of this channel, that largely to me may be the end of the up run for 2024. We will have gone up enough in 2024, and the market will be looking for more than a 6% correction. The market will be looking for a minimum of a 10% correction from that point forward. And so, again, I'm going to repeat myself. This next time, we want to confirm the up move by getting into the top part of this channel. And I want you guys to be aware that if we touch the top of this channel at any point in the next 30 days, you need to be prepared to be taking profit and considering your long-term position on your portfolio. This is going to be, when we hit this number, it's going to be a place where a lot of big tech will be hitting its all-time high. Now, not everything is going to hit its all-time high at the exact same time. But personally, I believe that when we get back to the top of this channel, we're then going to have 2.5 months of distribution. Distribution is price action that moves largely in a very wide pattern and largely sideways. Let's go back in time and look at how distribution looked here. So in the distribution phase, the price actually got higher than it did when it hit the top of the channel, but it was quickly followed by a very steep 10% pullback. And so I'm going to suggest to you that when we get to the top of the current channel, we're going to have very wild price action until we break that channel. Now, I will tell you this, as long as we don't break the channel, then it means we're going to continue in a bull run. But that's my overview for the S&P 500 today. All right, I'm going to take a very quick station break for a pre-recorded question that I answered regarding NordVPN. Check that out. All right, I got a ton of questions on why I recommended NordVPN recently in conjunction with crypto trading. And I just wanted to make it clear because some people really didn't even know the basics. I didn't know that some folks didn't know that VPN stands for Virtual Private Network. And if you are investing in crypto, one of the biggest obstacles that you have is the regulation that restricts you in various geographical locations. The way that a lot of people can get past that is by concealing their location, encrypting all of their interactions online, hiding their IP address, and putting up a big wall against the phishing attacks and the hackers. And that's another big dynamic of using NordVPN, is that you're far more likely in today's age, depending on where you live, to get hacked and have money stolen from you online than you are likely to ever get mugged on the street. So phishing attacks look like this. You go on booking.com on a public Wi-Fi location like Starbucks, and the hackers see that you booked a room at such and such hotel. They turn around, they send you an email pretending to be that hotel, telling you that something went wrong with your transaction. They need you to sign in and provide some more information. You sign in, bam, they've got your common username and password, or you actually give them your credit card, and now they have a lot of your data. But it just becomes 10 times worse when people have gotten into crypto and they're signing in and out and they're being subject to phishing attacks, and people can see what's going on and what platforms they're interacting with. You can bring it all to a stop and completely conceal yourself and choose where people think you're coming from by using a VPN like NordVPN. I'm going to leave a link in the top pinned comment for you guys. They were rated the #1 VPN for crypto trading in 2024. And if you use the link that I'm giving you and you choose the 2-year plan, you can get 4 months for free. And they've also got a 30-day money-back guarantee. If you've got any other questions on this and why I'm using it to protect myself from the hackers. I don't want anybody sending me false information, and I don't want to be limited in any way on any platform that I'm using to trade, whether it be Coinbase or some platform that doesn't require KYC. I just want to protect and keep private where I'm at and what my information is. That's why I recommended the NordVPN. I'm going to leave a link in the top pinned comment. You guys can do your own research on it and check it out. All right, let's talk about Bitcoin right now and the relationship that they have to the meme stocks. So this is incredible. You know, I'm comparing the current ascending channel that we're in to the 2021 ascending channel, and Bitcoin is come back and made a new all-time high the very same way that it did back in 2021. And after Bitcoin had made that new all-time high, which at that time was 64K, it then had a pretty substantial pullback, right? It went back to the golden pocket. Now, we have not had that strong of a pullback in this move, but right at that point, we saw that, that the meme stock craze came out of nowhere and kind of re-roused the market. Now, this is interesting because, one, I think it's part of what's going to continue to pump Bitcoin in the days ahead, but I also am telling you that it's actually part of a signal of a trend, an uptrend that is coming to an end on the overall markets. It's sort of like one of the final stages of a market moving higher, which is irrational money pouring into meme stocks. So this is one of the first points I want to make to you. I'm going to show you this chart that compares Bitcoin and GME and how they played with each other and how they were part of an upward move that lasted about 30 days. And that's kind of what I see happening right now with Bitcoin. And I don't think the GME move is over. I think that as more talking heads continue to share the story. All that is needed is for some more buying action to come in and scare the shorts. Now, I just want to remind you guys, because a lot of you guys don't understand how this works. Ultimately, the reason why this is happening is because these are considered dead companies. They've gotten into too much debt. They don't have a projected future growth model with high profit that should suggest that each earnings revision is going to be better than the next. And so at some point on Wall Street, company sees a what once used to be a thriving lion, okay, of the jungle, and he's old and he's weak, and the hyenas begin to circle him, right? And they begin to attack because he's near the end of his reign. And the hyenas are all of the smart money that are going to bring him down, right? And what they found with GME and Roaring Kitty is that there was a resurgence of strength. Now, it didn't mean that he was going to continue to reign and rule the jungle for decades to come. He's not Apple stock. He's not NVIDIA. He's not Microsoft. But he's like, I got one more attack in me today. And that's what we saw. We saw that Roaring Kitty's focus caused a bunch of attention to come in, and GME turned around. Now, for those who pile in, this is a great opportunity. When this spike occurs, it creates an opportunity for people to short it back down, right? But the way that shorting works is this: to be able to close your position, you have to rebuy the stock. And so what happened the last time we went through this is that it went way up, shorters piled back in, it came down. If they didn't buy the stock and close their position soon enough, in the after-hour markets, buyers came back in, pushing the price up, scaring them, and then those who are shorting had to turn around and buy it at a higher price, or they would lose money, driving it even higher. And so this game that has begun with the meme stocks isn't over, all right? And so it means that every single time it looks like it's over, that's the time to buy again. Now, that's right now. That's today. It looks like it's over. But I would be very, very surprised if everybody just comes into agreement and the hyenas come in and tear down the old lion. I think he's got fight in him still. Hopefully this analogy wasn't confusing to you. Lions, hyenas, and stocks and meme stocks. The bottom line is this: these stocks and the way that this shorting, the waves of shorting and closing occur, it means that these are going to pump some more. And so I'm just coming out here and telling you that early. It's not over. Don't panic sell at the bottom. And then when it turns around and pops up to, 100%, don't panic buy. Just, you're going to make a decision. If you're going to be involved in these meme stocks, you're buying on this horrible red day where it appears to be over. And I don't think it is. Let's go check out that Bitcoin and GME chart and see how the two interacted with each other over the course of 30 days while Bitcoin was going on to make its final all-time high and making a new high above 64K. That's what I want you guys to see. Okay, so the blue line is Bitcoin and the orange line is GME. And I want to point out to you guys that Bitcoin ran before GME, so it ran first, right? And then shortly after that, GME came out of nowhere and it ran very strong, right? And the two of them, and then of course GME had an incredible collapse of price, going almost all the way back to where it had started. And that's pretty much where we're at today. But then it followed up with even a stronger wave. And while this was happening, Bitcoin was going on to make its initial 64K high, right? I want to point that out to you. Now, ultimately, this led to GME having its final large peak, right? At that point, Bitcoin had pulled back, but as GME continued to have follow-up peaks, we got Bitcoin making its final all-time high. Now, I can't tell you exactly where we're at in this cycle, but I find it extremely ironic that GME has rose from the dead and Bitcoin is coming back from a recent low of 56K, now sitting at around 64 to 65K. I'm just going to tell you there's going to be more waves to this movement, and Bitcoin is getting caught up in it right now. All right, here we are. We've got the Bitcoin chart. We had the white dotted line in the middle. We're on the daily time frame. We see that after we had the halving event, as indicated by the white dotted line, actually Bitcoin had a little pump up and then a pretty strong pullback back to structural support at around 56K. At that time, I told you guys that we were going to hit 56K. And then from there, we got a nice little V-shaped bounce. And we've had a couple of these descending channels that have been breaking to the upside. And I had predicted to you guys when we were right here at 60K, I said, guys, we're not falling apart. We're going back up to 68K. I just want to make it very clear, guys, that structural support right now is right where it came back and touched 64.6. We could even possibly have a second downturn, maybe to 64.2 between today and tomorrow. But I'm going to tell you guys, it is my very strong opinion that we're coming back up here to hit this 68K. And so I'm going to repeat myself that Bitcoin and the meme stocks are still on fire and still trending higher right now. All right, let's get into the AMC chart. I've changed the candles to a weekly time frame. Back when this was here. Now this price, it says right here that this price is $34. That's because AMC had a 10-to-1 reverse split. But at the time, this was between $4 and $5 here. And I had predicted that we were going to have a final burst up to around $8.35. And this thing, after hours, I got the weekly candle on, but actually after hours, I think it went as high as $8.50. And we got that exact number, got this extremely bearish candle on the weekly time frame. I warned everybody at this point. I said, it's over, guys. It's over, it's over, it's over. Sell here, don't look back. A lot of people didn't listen to me. And then we got here with this little upturn, and people were saying to me, Josh, I think AMC is coming back to life. Is this a double, triple bottom? What do you think? And I said, no. I told you to get out. It'll never even get back here to this $8 price. You got to get out. After that, it had massive capitulation, bringing us to where we're at today. Now, this is a pretty ugly candle. I gave the prediction on the daily time frame. Let's switch to daily time frame. I gave the prediction when the price was right here. Larry called me up and said, hey, let's do a quick pop-up live to address what's happening with the meme stocks. At this price, before these candles existed, I said, it looks good. We're going higher tomorrow. We should definitely be above this $7.30 range. The following day, shot up to 11. Just absolute incredible move. I mentioned in that video that it could easily end up somewhere beneath $12. It hit 11.80 on the money. Now we've come back, right? And I just want to make this point. We have come back to structural support. And if you're gonna trade AMC, I'll tell you what I told the members of the Discord. I'm gonna tell you, you buy right here. You buy right here today before market closes. If you're gonna trade AMC, I would be shocked if we didn't get, at bare minimum, even if we don't go higher, I think it's possible for us to go higher, but at bare minimum, I think we should get a move back to $9. So I cannot make it any more clear to you guys, my opinion on AMC. And if I'm wrong, and if this bleeds down to nothing again, this will be the very first time I've ever made an AMC prediction and been wrong about it. All right, let's kind of get to GME. GME's slightly more complicated, maybe because I actually haven't spent as much time making calls on this chart, but I've got a couple line points for you to consider. We are in a downtrend. Personally, I said the other day that I would kind of expected it to come back to 24. Now, if it overshoots my estimation, it would make sense for it to come back even to 18. But personally, I think if you're going to take a chance on GME, you're going to take it at 24 or 18. If we do come back and hit 18 and we stay above it, that's why I got the rocket ship. It's only done if it opens and closes beneath 18. I'm going to repeat that. This move is only done in my eyes if you get a daily candle that opens and closes beneath 18. As long as we are above 18, the whole meme stock craze is still on fire and still happening, and there's still money to be made. This is just what happened last time. It ran up, it came all the way back down to where it took off, and it ran up again. So we're not there yet on GME. Okay, so 24 will be the first place of consideration. 18 would be your safest bet. You get out, you put your stop loss beneath 18, you call it done if for some reason we got beneath that. So I have two rocket ships here. I'm going to just make a point that let's say the move is not as strong as it was last time. If we do get a bounce at 18, at bare minimum, we're going to come back and test 40. But if we get the candle that closes above 40, then watch out. It would not at all shock me if we get back above 64. So there's so many stocks to cover. And there are folks that said in the comment section to me yesterday, said, Josh, I'm not going to touch AMC or GME. The last time I got totally burned. And I'm going to say that's fine. That's fine. There's plenty of big tech companies that are pushing higher right now. But I also want to just remind you, don't touch them later. So if it comes down and it hits that number that I gave you and it takes off and makes a new high, if you don't touch it now, you're not allowed to touch it later. There's an extra discipline or rule of trading from me today. Don't be tardy to the party. Okay, so those are my thoughts on the meme stocks right now. They're extremely hot, and I don't think that the move is over. I think that the fact that the meme stocks are firing off, the fact that I believe that Bitcoin may be right now going on to make a new all-time high, and it's very possible that when it does, that it'll be the end of Bitcoin dominance, and we'll see that number come down. And then we'll see the alts go on to absolutely shock people with a move higher over the next 2 months. So S&P 500, meme stocks, and Bitcoin are going to be very strong over the next 30 days. That's really what this video is about. Obviously, I could talk about NVIDIA, Apple, Tesla, DJT, Mara, SoFi, Palantir, all great companies. And I've got a lot of interesting technicals to drop on those plays I just gave you, those investments I just gave you. Don't miss a video. I've got great predictions coming out this week. I'm going to do a video on SoFi, and NVIDIA is one of my largest focal points right now and investments and trades, because I think that we are going to get to a test of that 960. And if we get a close above 962, then NVIDIA is going to go up $100, right? It's going to make a new all-time high. And so 960 is a really strong area of resistance. And I don't see how, if the S&P 500 is pushing to all-time highs, and that's just not going to turn off, right? We're not just going to end. Momentum doesn't work that way, right? It gets up to these areas of resistance. It tests them a number of times, gets very volatile, and then it falls back. I don't see how NVIDIA isn't going to hit that test. Now, timing matters, right? Timing matters. If you got into a position on any of the things I talked about today, I'll just tell you, if we get a couple days of cool off, that would not shock me. You want to then just stick to your trade plan based on the big picture view. That's why I'm giving you big picture views. So I'm favoring these moves to the upside. And I've said it before, and I'll say it again. The most important mind frame that I have right now regarding my trading is to buy the dips, right? It's not to be looking for big corrections right now. Those big corrections, we got them. We got them a couple weeks back when I called them, when NVIDIA came down $100 in the course of almost 2 days, right? We got it. Now we're looking for testing the top of the range. Guys, let me know in the comment section if this guidance and these plays were of interest to you and you want more of it. I'll do my best. I appreciate each and every one of you. Hit that subscribe. Don't neglect the like. It sends the video out to more viewers and helps the page. Thanks again. Peace and blessings. Take care.